following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have our friend Norm Winsky from Astro Trends on at the half-hour break. He will be going over some of the things that he looks at, and as you've been following him, he's done a superb job at picking some of these major trends, especially in the gold and bond and stock markets, which is, really good. He's done far better than this old cowboy with the stocks, because I didn't think they could go that high, but in fact they did. One of the questions that someone, in fact actually two people, emailed me over the last day or so, because when I look at these Fibonacci numbers, I keep it to just four. The expansion numbers are 127 and 1.618. And on the retracement levels, 618 and 786. And the reason for that is I want to keep it as simple as possible. Many of you know that I'm a good friend of Bryce Gilmore, and Bryce used to come out to California and live in the trading house for 3 or 4 months every year for, 6 or 7 years. And he would be there, and Bob Miner would come in, who's another Elliott wave guy who's pretty good, and they would be arguing whether it's a 2-wave or a 3-wave or a 4-wave, and that was just over this way over my pay grade. So I just tried to keep it as simple as possible. Well, one of the things that's happened in the S&P market and also in the Dow Jones market is I was looking for a 78.6% retracement to stop the market. That was around 17,900, I believe, somewhere. I don't remember the exact number, but what in fact happened on both the S&P and the Dow Jones is they went to 0.886, which is the square root of 786. Now here's where the problem lies. I mean, you can put numbers up there till you roll off a table, because they're going to hit one of them. So that's why I only use the 4. So if it goes beyond that, that's what I'm looking at. But frankly, I look at the New York Stock Exchange Index. I have for years. Peter Leides was the one that first put me onto that, along with his good friend and my good friend Eddie Horowitz, because it's the broadest indicator of what stocks are really doing. But because of the fact that we have these NASDAQ stocks that are triple digits and they're cap weighted, that can skew the market a great deal. It's not the real market, but they're showing you that's what those stocks are doing. Now, the first chart that I posted in here comes from our good friend Jim Bartolioni. We posted this yesterday because it shows the big divergence that's happened between 2007 and where we are right now. The charts are nearly perfectly similar, except that this one happens to be a little bit more bearish. And the reason for that is the rally back has not been nearly as strong. It comes from a lower level, than it was in 2007. Now, markets have a tendency to fall of their own weight, if that's correct. Now, we had a little bit of a sell-off yesterday, a little more than 1% in the Dow, which really means nothing. The key today will be if the S&P 500 futures can close below 2059. If it can do that, that would go a long way to saying that yes, this top that looks like came in last week is probably going to be it for quite some time. I do believe that that'll be the last top. If that is the top, that'll be the last top that this old cowboy will see. It won't live long enough to see another top. That's how big this pattern is on this 1, 2, 3, 4, 5 expanding triangle. European markets, Today was interesting because the DAX rallied most of the morning while the S&P was going lower. That's highly unusual because they go tick for tick, very, very closely. But part of it was due to the fact that the euro was under more pressure again today, breaking the 107 level. And it looks like we're not very far away from par right now. Just a few days ago, if you'll remember, we were trading at 110. Now we're at 106 and change. If we go the same amount or just a little bit more, we could be at par by the end of the week. I don't think that's going to happen, but with the Federal Reserve in there, and if they do something, raise rates by more than people think or something like that, anything could happen, then we might get to that par level in the euro, which I think we're going to receive. Folks, remember that the euro has a history going back from when they started trading back in 1999. It came out at 125. And it went down to 80 and went from 80 up to 160 and 160 back to 85 again. So it's had huge swings. So that's one of the things that makes it such a good trading vehicle, is the fact that you do have these big swings. So that's what we're watching. We have some really important patterns happening in other currencies, folks, that really deserve our attention. And one of them that I want to bring to your attention is the Swiss franc. And I'll show you where we are, because we've come very, very close to the double top here. And you want to watch it very closely, because as you can see, you have really wild swings here. But at this level, near this 101 and change level in the Swiss franc, we are looking at a butterfly pattern and an ABCD pattern forming at a potential double top. So the way you like to handle that is it's coming in here very quietly too. There's nothing crazy going on in the market, which is really nice. So you want to watch to see how it gets to this level, and wait till it reaches that 101 and change, and then look for a selling opportunity, when it closes lower the first or reverses the next 2 days, two previous days lows. That's the best way probably to enter the market from the short side. But it's got a lot of things telling us that we are really, really close here in the market for a double top here in the Swiss franc. Now, if we take a look at the Canadian dollar, we are looking, as soon as the old cowboy finds a Canadian dollar, I just had it right here. Where did it go? Well, here it is. I found it. Just jumped right out at me. We have the same thing going on in the Canadian dollar, but it's at the 786 retracement up around this 133 level. And so you want to watch that one. And then we have one other one that is, of course, really important to stock market watchers, and that is the Japanese yen versus the US dollar on the daily chart. You'll see that we have this big ABCD pattern completing up here at the 786. There's also a 20-minute line there, as you can see. That's a fulcrum line that usually acts like a hammer to snap prices back to the downside. Whether this is going to happen or not, one would have to wait and see. But if you'll notice what happened in early September, that line held the market, spot on. After it broke down really hard, it rallied right back and touched that line one more time, and then sold off to a 61% retracement before rallying 500 pips. So this is really an important spot here in the yen versus the dollar, or excuse me, the dollar versus the yen. This is really a spot on number that we're watching here for today. So that's the other one. So we have three of them that are in the wheelhouse for a pretty big move. We have the yen, Canadian dollar, and Swiss franc, all against the U.S. dollar, that look extremely interesting. Now, I wanted to share some information that I received from one of our subscribers. They send us a lot of great information, and this is from Larry Edelson. He's a very famous ex-floor trader. everybody's an ex-floor trader now because we don't have any more floors to trade off of. Everything's electronic. But basically what you're looking at here is a neural network. A neural network is a way of, going back and look at past prices to see how well they line up. And as you'll notice, the correlation on this one is quite high. I didn't get this until yesterday, folks. Otherwise, I would have certainly posted it, especially back on October the 28th when we were making that ABCD pattern in the gold market. It was a beautiful sale. I saw that sale, but what I preferred to do was to wait on the buying opportunity at 11:38 that lasted about an hour and a half, and as we're still making new lows today. We got below the 1088 again, so this is telling us that we're probably not going to bottom until the middle of December. That's what this is. That's what this model is telling us. Now I'll just keep this in the back of the mind here, put it on my desktop, and as I've got it bookmarked to check it here around the middle of December. And if it's doing that, then that might give us another good opportunity. I frankly like neural networks quite a bit because I work with them for quite a while. They're good when they work. Well, it's like everything else. When they work, they're absolutely like magic, and when they don't work, they're not magic. So you just got to realize that when they're not working, you move on to the next thing, and it will not be happening, too very much. So that's basically what we're looking at. The euro, we've had a question here about the price objective on the euro, and I'll just bring up the weekly chart to let you look at it here. You'll see that the long-term objective here on this weekly chart gives you an idea of where we are down at the area of 99. This shows you the volatility that you have in the euro going back to 1991. Actually, it was 95, I believe, when they first started to do this. This is basically, I think, the Deutschmark rollover, if I'm not mistaken, but I'm not 100% sure because it wasn't until 99 when all the currencies started and the coinage started to come from every area. I was very fortunate because I had friends and students from all over the world, and in each country they would send me the coinage of the new euro coins, and some of them are absolutely beautiful. The ones from Italy, of course, show the works of Leonardo da Vinci and Michelangelo, and there's some other ones that are in there. They're just fabulous. It's just really some beautiful coins. Of course, I gave them to my grandson. He was born right at that time, so he put that away in his collection. But anyway, it looks like the euro is heading down here to this 99 level. You got several ABCDs. You've got the 786 retracement coming in. But even more important than that is the rally that we had from March until August was just really a very, very shallow ABCD rally, and pointing far lower in prices along with the euro. So whether that's going to be an effect on the gold or not longer term, I'm not sure, but gold still is moving to the downside, so you don't want to try to pick a bottom in here. I don't see anything here to make it. We'll take a little break here, and we'll get back and we'll chat a little bit more about the gold and silver.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, that's a 10-4. Okay, we're back, folks, and today is a lucky day. We have our good friend from La Paz, Mexico, Priceline Charlie on the line. Charlie, are you there?
Yes, Sam. How are you, Larry?
I'm good. Please tell me you shorted some up there.
I was short. The reason is the previous earning was positive and it jumped up, and they never have a follow-up quarter, never before. So based upon that pattern, I decided, since the last time was jumped and a surprise to the upside, this time I shorted it.
Well, good for you. It's had a heck of a move on the first day. It dropped 10% the first day. That's a pretty good move.
You know, you say 10%. It's nearly $7 billion. I'm like, wow. Which shows you the amount of froth that's up there right now.
It really is. It's a little scary when you see all the dollars amounts with the stocks. It's look at Apple. You know, it's worth what, $800 billion. I mean, that's just a unbelievable number. But you know, that's the way. There's an old Bernard Baruch used to say. It was actually Jesse Livermore said, "Don't be afraid of high prices. They're there for a reason." So that's usually the case. So we'll see what happens. But this tells us that with this big gap down and the big move down, that it's going to come down quite a bit lower. I would think at least another $100 a share without any trouble at all. Was there any reason for the drop, Charlie? I mean, their earnings were good. I remember seeing that. And then right after that, something happened and boom, down it came. So who knows?
I tell you, it's very simple. I call it the AOL reason. AOL used to trade in millions in numbers. Great company making great profit, disappointed. Look at AOL today. I think Priceline has got so much competition. It's not like Google. It's not like Microsoft, where they have something unique. This company is operating in an environment that has a lot of competition. Competition's catching on. Many times the people who they're dealing with, like for me, I used to go to Florida and go to La Quinta, and I used to go on Price and I used to get a better price. The last time I went to La Quinta gave me a better price than Priceline. So I decided Priceline is losing its edge, and that's why Priceline is my AOL target. This is the kind of company that's going to go from $200 billion, or in this case $70 billion, back to $1 billion. It's not worth that much. And
Charlie, one of our listeners has asked, do you actually short the stock, or do you use puts to do this?
I'm not a sophisticated trader. I am actually short the stock. I put up the money and I take the pain when it goes against me, but I protect it. And I take gambles. A controlled gamble was yesterday, because I said the previous earning was up. This one can't be up because it has never done in the past. And that's the only reason I took the gamble. So it's like really putting your money on the table and saying, I may lose a lot of money. But I look now, but I will add one more thing. I do follow the Elliott wave, but I do it on a long-term basis. If you would look at a 4-year monthly, you will see we just look like, to me, completed the 5th wave. I looked at it earlier today. The first wave was actually completed on April of 2012. The second wave was October 2012, where it drops a little bit. The third wave, the big wave, ended in February of 2014. And that gives me the clue, because Elliott waves are tricky. And there's 5 different
Tell
waves.
me about it.
But the easy one was the third wave. The third wave went from October 2012 to February of 2014. That was my clue. When it hit the top, it did a small ABC, came down. The 4th wave ended in January of this year, and we just attempted to break. This was the attempt yesterday. It failed, which now tells me long term, I'm going to be safe betting against the company. It depends what happens in the next 2 or 3 days. If it doesn't jump back and recover, which I don't expect it to, long term, it's headed down.
Sounds like it sounds like a good plan. I wish you'd check in with us every couple weeks just to make sure it's following along the protocol. The only reason I follow this stock is because of you, Charlie. So if you see something interesting, be sure to let us know.
You know, I watch you on the YouTube channel. I watch many of your presentations there, and I like the way you do your retracement. What percentage do you think is going to retrace?
Oh, listen, I have to run now, Charlie, but thanks for calling in, my friend.
You're welcome, bye. Thank you for the help.
Thanks for calling. All right, bye-bye. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization
memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and with great pleasure, I'd like to bring our friend Norm Winsky from Astro Trends on the line. Norman, are you there?
Yes, sir, Larry, I'm here. Good morning.
All right.
Thanks for having
Norman,
me on.
after 35 years, you can drop the sir.
Yes, sir.
I know you got that old Southern Indiana upbringing, which is good. Listen, my friend, I'm going to turn it over to you now, and you fire away with what you think folks should be looking at. Now, as most of our listeners know, that you've done a terrific job of pinpointing some of these major turns. So why don't you tell us what you're looking at here?
Okay, can you see, I don't know if you can see my charts or not. You see my notes?
Yeah, that will be posted into the Tiger Den without any trouble at all. Yeah, just go fire away.
I'm on the screen share there. Hopefully it's working. And so
I think so. They will tell me if it isn't. It looks like it is. So.
All right, good. So we have a quick review of the planetary index. It's kind of like a Bradley model type thing that I had showed last month. And here the blue line was the forecast, and the black bars are the actual. I think we got the 15-minute Dow Jones there for last month. So that was starting on think I started this on September 28th, and ended on October 23rd. And so, moving ahead here now, here's what's coming up in the future. Here, I'll show that chart one more time, just so you can see
Norm,
that.
don't we have some pretty good Astro stuff going on here right now?
Right. Well, that's why I asked to come on. Coming up here in the next couple of weeks, we have some interesting things. We had kind of a moderate size change in trend due yesterday for U.S. financials, especially with some emphasis on the U.S. dollar. So we'll look at a chart on that in a minute.
Hold on. Will you stay with me 1 second, Norm?
Yeah.
We're having a technical problem because they're not able to see the charts in the den. They can see them into Tiger TV if they post them there, but these are our good friends, our loyal listeners are in here, and they can't see the charts. Why don't we just do a little recap today? Could I have you back on tomorrow so we could have all the charts ready?
Okay.
Could we do that?
I guess I have to redo the chart.
I'll still send you the big check, but would like to do it tomorrow if we could. I want to ask you just a couple of quick questions. Now, we have the new moon coming in here on the tomorrow, I guess, correct?
Right.
Now, does it have any special meanings this time? It's not like a super full moon or apogee or perigee
just
or anything like that.
Regular good old fashioned new moon,
Okay. Okay. Now after this,
it's interesting. It occurs during the middle of the day, so you get to kind of see,
Oh, that's very. What time does it happen during the morning?
I think it's 12:40, about 12:48 p.m. Eastern time.
So right after lunchtime, New York time, tomorrow.
Right up.
Those of you that have were not on the air with us back on May 19th, Norm had posted Mercury going retrograde with a new moon, and I believe it came within 15 minutes of the exact time, as I recall, and that marked the high of the stock market of the New York Stock Exchange Index. And of course, we had a 12% drop from that level. So it'll be interesting to see that it happens during market hours. That's not very often that it has that, does it?
Well, yeah, it's kind of a matter of the trading day, the regular normal trading day, the day session is roughly 1/3 of a day, so about 1 out of 3 times you're probably going to have that, right?
Sure. Now, have you?
So I'm not able to show anything today.
No, I can't get it up, and I don't want to. The trouble, you know how technically oriented I am. So it would be much easier if we just did it tomorrow. Is that okay?
I guess so.
All right. Why don't we do this, and we'll have you on tomorrow. I'll have you on early tomorrow so we can get more done, because you have such great information for the folks that I think it's worth the time. So we'll have you on before the first break tomorrow, say about 20 minutes after the hour, and then if you'll send the charts into TFNN, we'll have everything so everyone can see it, because your information is valuable, Norm. You're only one of a few people that I follow, so I don't know if that's good or bad, but you do great work. So I want you to.
Now, what
come
do you
back
mean by
on
sending
tomorrow.
them into TFNN? Am I supposed to email them or?
Yeah, no, just Skype them in like you usually do. You send them through your Skype.
In the past we were able to just. I thought we could just do the screen sharing. Okay.
Yeah, that's what we'll do that tomorrow. How's that?
All right. Well, maybe you and I can confer later today to figure it out.
Yeah, we'll do that, and then we'll have you back on tomorrow. How's that?
Okay.
All right, we'll talk to you tomorrow then, Norm. Sorry for the mix-up, but I'd rather do it the right way so everybody can see it, because it's pretty valuable information. By the way, when do you think we'll see a Now Index number come up? Any idea?
I have no idea, no control over that.
I mean, you had 4 or 5 of them in a row, and then nothing for quite a while. I mean, my family has to eat too, Norm. You got to find something in there, right?
No, it's kind of gone to sleep, and that was kind of the way it was last year. And then all of a sudden we got that crazy volatile period there between about June and September, and then they now woke up.
Yeah, we'll see what happens. All right, we'll have you on tomorrow, okay, Norm?
All right.
All right,
Thank
thanks
you.
a lot, folks. Norm Winsky
Bye.
of Astro Trends. Okay. All right. The next thing we want to talk about is we've been mentioning these moves in the currencies, and I think it's important that we keep an eye on this because it's got a real chance of making some serious stops here in the Swiss franc, Canadian dollar, and also in the Japanese yen. It'll happen within the next day or two. Maybe it's related to what's happening with the Federal Reserve. I'm not sure. The one thing I do believe is that the Federal Reserve action has already been discounted by the market. If we take a look here at the long-term picture in the Treasury notes, as you can see, notes have been coming down ever since early October, so we're down well over a month, pretty much straight down. And we're almost at the exact 786 retracement here in the notes. It's only about 10 pips away from that level. So it looks like, we should get down to that level. And believe me, I think, and this is my opinion, after the Federal Reserve does do their thing, if they do it, and it's no 100% that they're going to, that the market will probably do the exact opposite of what everybody's expecting. In other words, the market has already discounted, what the Fed is going to do with a 0.25% interest rate, and then they'll probably, have a pretty good rally just to scare the death out of the shorts, and then we'll find out if that's, going to be the case. Now, the key today in the stock market, in my opinion, is we did have a 1% move down yesterday. Now, if we get another 1% or more move down today, that is going to solidify that the top that we were looking at when we were looking at that top sent to us by Jim Bartolioni going back to 2007, showing the comparisons. As a matter of fact, we've been showing this chart here for well over several months. This is the longer term one. What Bart did was to blow it up and let us see this last rally that we're having at the 61% retracement in the New York Stock Exchange Index, because we certainly hit that, and it sold off a little bit on the first day, and that's why you have to have some follow through to come down to see if the market's going to continue falling down, because we're actually down 4 days now from the high, and we've got the new moon coming in tomorrow at 12:40 p.m. Eastern time, so that could very easily be a bottom, and then we'll see what the rally happens to give us, if in fact that is what's happening. So we'll watch it closely here. But this New York Stock Exchange Index is indicating that yes, there's a high probability that we are getting ready to move to the downside. If you remember yesterday, I shared with you the move that we had in the NASDAQ, which is basically 15 stocks, and you'll notice that from July through 24th of August, the market came down 25 trading days, and from September the 29th, when we had the super full moon, where we had the apogee and moon at zero declination and the full moon, the market went straight up 25 days, and it topped last Wednesday. So, and it's so far that top is held, but it's still minor top. In fact, if it turns around and goes back up to see. Now, we've had some questions about the Chinese market, and those are the most difficult questions to answer, folks, because we don't get all the information out of there like we do here. They don't have open interest figures and stuff like we have with our markets, and they don't have a Security and Exchange Commission, I don't believe. If they do, they don't work it very well. I think the government just takes it over, and because that's what they did the last time. They just stopped doing these things. So we'll watch what's going on here. So anyway, this is what we're watching here early in the morning. The NASDAQ has just taken out the previous day's low. We haven't quite done that in the S&P yet, but still a little bit early. We'll wait and see if that's going to happen. And then the other question that someone's asked was about the crude oil. Folks, crude oil is going to have a whole lot of support supposedly down at the and this is where it looks like it's going to me going, in my opinion, is that by looking at the charts, is we have a big Gartley pattern in crude oil coming in at the 40.50 level. That's the 786 retracement of the low from August 24th. It's also that 786 retracement of that whole move from August, and it's also the ABCD from October through November. So you have three major numbers there. And once we get below the 43.70 level, that would be below the 786. That would tell us that we're probably going to drop another $3 a barrel down to the that 40.50 area that we'll be looking for in the crude oil. Believe me, folks, the commodity markets do not look that exciting. Believe me, they certainly don't look very good. They have a excuse me. We have a situation in both gold and silver, with silver looking a little bit better than gold, but they're also going down. Copper made new lows, and it's basically looking much weaker also. So you've got a situation where copper is looks like the next level is going to be a butterfly pattern down around $2 a pound in copper. That's another 10% drop from where we are now. So the overall commodity prices are not telling us that nothing exciting is happening here, at least from the other side. And then when you see the fact that China's production numbers are dropping, and their import numbers are dropping, and their export numbers are dropping, they certainly don't look like they want to be turning around too much right now. The key today, folks, from a technical standpoint, is a bad close. If we get a bad close in the stock market today, watch this new moon coming in. That'll be a little bit of a bounce, I would think. But remember, markets follow their own weight, and you want to watch that, very, very closely when you're looking at what you're going to see what's going back again. I wanted to repost the overbought indicator from John Murphy that I posted yesterday. It basically shows, the overbought condition that we have in the market. As you can see from that top chart there, where it's colored in dark blue, that was when it was very, very oversold. That was back on August the 24th, and now we're in a quite a bit overbought situation, and we'll see if this is going to be a turn in the market. But basically, it's that New York Stock Exchange index that I look at very, very closely. Sometimes it serves you well, sometimes it doesn't, but it's telling you that the market has not been nearly as strong as the NASDAQ stocks and a few of these other stocks have been showing you, and they've had some pretty big moves. I mean, the ABCD patterns, all of these patterns that we looked at yesterday in Google and Apple and all these other ones, they all have, well, Apple doesn't have any big gaps. It hit the 786, but Google and Microsoft and McDonald's and Nike, all of those big Dow stocks have completed patterns with huge gaps. And as we know, these gaps are filled, and whether they come in now or later, remains to be seen. We'll have to wait and see. We've had a question about the Australian dollar. That still looks like it wants to go a little bit lower. It might be having some support coming in here around the 70 level in the Australian dollar, but it's still a little too early to say anything about it. And believe me, when the Fed comes in and does something, it will affect these currencies a great deal. These three tops that I'm looking at in the Japanese yen, the Canadian dollar, and the Swiss franc could disappear in a heartbeat, because it's very easy for these things to move very, very dramatically. As you know from what happened on last Friday when we had the jobs report, you can imagine when the Federal Reserve comes in to do something, it can even be something more dramatic. We're going to take a little break here. We're going to come back and wrap up the show here. So we'll be right back after these few words.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course,
Trade LABU or LABD. Directions Daily S&P Biotech 3 times Bull and Bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
I just realized. Okay, folks, we're back, and I just realized where the problem was with our guest, Norm Winsky. I was tried to be hacked by someone through Google last night, and Google shut down the account. And that's where the information came through, and I didn't get it. So that's what the problem was. So we'll have Norm on tomorrow with his information, because he certainly does some of the best cycle work that I've seen in my years in this business. So we'll have Norm Winsky from Astro Trends on tomorrow. The key to watch today, folks, is we started out showing you the divergence of what happened between 2007 and where we are now in 2015 on the New New York Stock Exchange Index. They are absolutely perfect correlations at the 61% retracement. We had our first down day yesterday, and if you'll remember, the New York Stock Exchange Index only spent 2 hours above the 61% retracement, and it only exceeded the 618 by 0.005, 5/1000ths of a point. So that's really a very small amount for error. And now that it's closed lower the first day, could be the indication. But if we turn around and get really strong and take out those old highs, then we're going to go a whole lot higher. That would be my guess. So this will be a key day today and tomorrow, watching these markets move, see how much rallying power that we have. We made a lower low in the NASDAQ right after the open, and we've had a little bit of a rally. The S&P did not make a new low, so that's another positive from the stock market standpoint. But the close will be the most important part today, because if we close really strong, that will tell us, yes, we do probably have some more to go to the upside. So we'll have to let the market decide if that's what it's going to do. But the overall divergence on this longer term chart, remember this is a chart that goes back almost 10 years, that it's a pretty significant, and the divergence is it's startling. It's so similar, so you want to pay attention to that. But the key, I believe, will be today is if we get a bad close, then that will tell us, yeah, we're probably getting ready to look at. We're going to have some resistance in the S&P up around 2083, I believe, but that's still early in the day. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.